Hi, welcome back to What's Next in Buying a House. Glennis and I have some more tips for you in the second episode of What's Next in Buying a House with Mara and Glennis. So in the last episode, we talked a lot about kind of the pre-showing things that you're going to need to have ready to go before we really get going on looking, and kind of some of the things that we do to get you ready to be in the market to buy a house. So let's just assume we've seen a number of homes, and you, or maybe one or 12, and you are ready to make an offer on a house. So let's kind of talk about what some of those first steps are in making your first offer. So we've talked already about how the market has shifted, and it is continuing to shift. When we are making an offer, there are many terms that we're looking at that we will put into your contract, into your offer, that can help you win the deal and not pay too much money. We talked before about doing comps in the neighborhood of the home that you're considering, and I think that is very important. It's also important when we're looking at those comps to really shorten the time that we're looking at when the other comps have sold. So if they have sold within the last 6 months, they might not be very adequate comps anymore because the market has shifted. So we're really going to look at what the house was offered at, those other homes, and what they were sold at and when they were sold, to kind of gauge whether those comps are adequate or valuable to us right now. Because the shift is ongoing, and we're kind of right in the middle of between becoming a balanced market, and we're really seeing that it's as much of a buyer's market as it is a seller's market. We do have a lot more options as a buyer. So when we are looking at the terms of the offer that you're making, it's important to think about that and those things. We don't necessarily have to be as aggressive as we were over the summer and in the last couple of years to win an offer. There may not be others. You may be the only offer. Depending on the market in which you're buying, if you're buying a house between, I'd say, 200 and 400, there may be multiple offers if the house is perfect and ready to go, or there may be one, or there may not be any. And if you're in an upper bracket, that house might have been on the market for a few weeks and even had a price reduction. So the variables are huge. So I'm going to try to talk a little generally about what we would include in your offer. Generally, I tell my buyers that they should think about making an offer with a number where they feel good and confident about what they can afford. But if they don't get it, they won't be disappointed. That's a fine line, and that's a decision that only you can make. I can give you a suggestion on where I think is too much, or where I think you might be able to win the offer. We're seeing counter offers now. So, there really are still some deals to be made. You're not going to get anything at a steal, most likely, but we can go in with an offer and allow the seller to give us a counter offer as an option. Or if it's your dream house and you don't want to miss it, and that's the house and you've been looking for a long time, and perhaps you've even lost a few, and you're ready to just make a very strong offer, that's an appropriate thing to do as well. They're all so individual. I can't give you the right thing to do. We really have to weigh that and think about your motivation and what you need to do for you and your family. Things that will make offers more desirable are having a loan that has no contingencies. So having a conventional loan is excellent. There are great things to be said about FHA and VA and USDA. Those are wonderful loans as well, and we'll do the best that we can if we end up with financing that is within one of those realms. And I've sold many, and that's not scary to me, but you do know that your appraisals might be a little bit different than if you had a conventional loan. So we'll talk over some of those things as well. Glennis is hot. Can you see the shake in the car? We'll get her a drink of water here soon. If you have a cash offer, that's a great thing to have too. And those give a lot of leeway and ability to close fast and not having to deal with an appraisal. And so that's always a great opportunity if you are in a position to make a cash offer. Thinking about, we are still seeing some as-is addendums. We do see some sellers that are including those in their buyer documents. And so they're already saying that they want to sell the house as is and are including the addendum in the documents to start with. Like the sellers, there are 3 different options for as is. It's all the same. So you could do no as is, which is a normal, what's part of the contract, which typically gives you 10 days to have an inspection done on the home. And then you are able to have any inspector that you want come in during that 10 days. You can have contractors come in and give you bids if you see that there's work to be done. After we present the inspection report and let them know that we are either going to renegotiate or accept the house as it is, then if you're going to renegotiate, we have 5 days to negotiate with the seller on what you would like them to do. So that way we're ending up going back and forth depending on the situation. We might take money off. We might ask the seller to complete some action items, or that's renegotiating. So other than that, that's kind of it. The seller can decide yes, no, maybe partly. And at that point, we will go back and forth and hopefully end up with a solution that makes everyone happy, or at least is adequate enough to continue the deal. If not, the buyer, you, can walk, and you would be able to keep your earnest deposit check. In its present condition, or as is, with the box 1, is saying that you are going to do inspections. You are not going to ask them to make any changes. But if something comes up that you are uncomfortable with or is unacceptable to you, you do have the opportunity to walk with your earnest money deposit intact with you. So that is as is inspection box 1. Box 2 is that you're going to have inspections done only for your information. Those you don't need to share with the seller, and you're not going to ask them to make any changes or improvements. However, if something big comes up and you are not happy with it, you will lose your earnest deposit check money if you walk from that one. So that is, you've got to be real serious about the house, perhaps really checked it out closely, or brought in somebody who, like your contractor, with you, so you don't have any surprises. Obviously, what you can't see, you don't know. We're not going to be doing any sewer line checks or inspections with that, but we can see a lot and get an idea if it's a solid house. As is, or in its present condition, box 3 is something that we were seeing when the market was very, very strong for sellers. And that is that you don't do an inspection, you don't ask for any changes, and there's penalty of losing your earnest deposit check if you walk. That's pretty risky, and I didn't even really like that very much during a seller's market. But if that's what a buyer wants to do, that's what we'll do. Closing date is something that's also in the contract, and that's something that we will, I typically like to ask the seller what they would prefer for a closing date and kind of work it around your schedule and their schedule. We want that to be beneficial to everyone. So picking a closing date that works for both the buyer and the seller is ideal. Earnest deposit money goes to the title company, and typically that's 1%. Sometimes people put in less than that, and I don't know that that's beneficial to you as the buyer. I feel like 1% or higher is better. The higher the earnest deposit is showing, the more you're in the game. So especially if you're doing an as-is addendum, you have more to lose. It shows that you are very much involved in the process, and you are making a commitment to that home when you make a higher earnest deposit deposit. And then finally, down payment is part of your terms. This has to do with your loan as well. So, and how much you've saved. Obviously, if you have a FHA loan, you might be able to do as low as 3%. If you have a VA loan, you could possibly have a 0% down payment. If you have a conventional loan, those are usually 20% or above. A lot of sellers find a higher down payment as being stronger offer. Now, on the other hand, it doesn't really matter because it's financed. But it does give a sense of security to a seller, especially if there are multiple offers. So a high down payment does make a difference in the strength of an offer, especially if there are multiple offers. We have talked a little bit about contingencies. Those are fairly tricky. If you must sell your home before you are buying a home, your offer is contingent upon the sale of the home. We are seeing a little bit more of those now. We weren't seeing them for several years just because the market was so strong, and with multiple offers, a buyer or a seller was able to just throw those offers out and skip them altogether, and really go for a home or a buyer that had no contingencies. Something that we were seeing a lot during the last few years with multiple offers were escalation clauses. So an escalation clause is basically you are saying, it's kind of like an eBay auction. If you're familiar with eBay auctions, let's just say the house is $350,000 and you are one of several offers. We know there are multiple offers. We know they are asking price or above. This is a way for us to help you not pay too much for this home. However, the downside is we are basically showing the sellers your hand, and we're showing them how much money you have. They can, and sometimes do, just make a counter offer for the highest cap on your escalation clause. So an escalation clause, so again, where 350 is the asking price. Let's say there are 4 other offers on the table, and you're the highest amount that you are willing to pay or you are able to pay, that's your cap, is $375. So we can make an offer. Again, let's say it was 350's asking. We know they're over. I would suggest that you start over. So say 355, 360, and you say your cap is 375. So your base, let's say 360, can go up to 375, and then we put an increment in there. I kind of like 2,000 or 2,500. Some people just do 1,000 or 1,500, whatever it is. And then every time one of those other offers, if it's a little bit above, but you still have your cap at 375, and say that next offer was 365, you're still in the game. And you keep going up until maybe there was another offer that was 376 or 377. That one wins because your cap was at 375 and you're kicked out. So you're able to set your cap if other of the offers, because we don't know what they were, if they were below that, you have an opportunity to win that, and you didn't end up at the end having to pay that 375. So that's an escalation clause. It's sometimes a little easier. Obviously, if we're doing one, we'll be explaining it again, but that's a pretty simple explanation of what an escalation clause is. We do not do that unless there are multiple offers. That's only a multiple offer sort of technique. Other things that we were seeing when it was a seller's market, and if you are working really hard to get that offer, is rent backs or lease backs, where we can talk a little bit more about those if you get into that situation. But sometimes a buyer or a seller needs to stay in the house a little bit longer, and we can work that out. Those get a little complicated, but that is an option to make your offer even more wonderful. One other thing that we see in offers that we could ask if you are maybe the only offer is asking for a home warranty. And this is something that we used to see a lot with first-time home buyers. And if there are multiple offers, I don't recommend doing it. But we can always ask for a seller-paid home warranty. And that was with a company like New Republic or AB May or HSA. And you would basically be getting a year's worth of service and home warranty on your home that the seller pays for. Those run between $500 and $700 paid by the seller. We are still not seeing many seller-paid closing costs unless the home has been on the market for some time and we know that the seller is motivated, we typically don't ask for those right now. But, I think that might be something that is going to be a possibility in the future. Or if it's a home that hasn't been moving or has dropped several times in price, and you're really wanting to get that done and see what you can get out of it, asking for closing costs is always an option. So that's step 2. Let me know if you have any questions in the comments, or better yet, if we're already working together, shoot me a text and let's set up a time to visit about it. Thanks for watching.